question, what additional processes and controls are required to implement?
So I think I can start this, Eric. I think that there are a number of additional processes and controls that will be required as a result of the adoption of 606. I think what companies need to do is obviously start off with some kind of an assessment. Normally the way that we work when we do these projects is we start out with a discovery phase where we do an initial impact assessment and look at current controls and processes and really try to identify revenue streams associated with the company's business and get to a level of granularity where we can look at the risks associated with each one of those revenue streams and then determine what improvements in the internal control systems and processes are needed. I think some of the common ones are there may be additional controls with respect to the sales process and pricing, because you are required to maintain a standalone selling price, and that standalone selling price may change over time. And to the extent that sales pricing or go-to-market strategies and so forth change, there needs to be a trigger there for the finance staff to be able to evaluate that and work that into the process, and not only updating the standalone selling prices, but also the contracting process all the way through. There are additional IT controls associated with the standard, again, depending on the way that you're adopting the standard, the requirement to maintain 2 sets of books for some period of time, and also just the configuration of an IT system there to accommodate the different variability and aspects of 606. In addition, obviously more financial controls, contract review controls. There need to be new controls over contract modifications and amendments. As we talked previously, this standard incorporates a specific model for evaluating contract modifications and amendments that is not present under current GAAP. So there are some new 606 requirements that will dictate additional controls needed within companies. Again, when we talk about some of those areas that require judgment, whether it be material rights or variable consideration like we talked about earlier, certainly more controls there. And you know, we haven't talked a tremendous amount about costs here, but there are controls over not only the capitalization requirements of costs, but the amortization period and whether there is any kind of subsequent impairment of those costs. So additional controls needed there and changes to current systems and processes as well. I will say, Eric, we didn't touch on it too much, but NetSuite, unlike a lot of systems, does have the capability of matching those commission expenses with the revenue streams and amortizing those. So that is a way to automate that feature of having to capitalize costs and amortize them with the different revenue streams.